And I'm giving a little follow-up video for the bear case. In case this is bearish, there is a way to look at it bearish, and I didn't see it until recently with regards to Elliott wave. Usually when I do Elliott wave, I will heavily depend on measurements of how things are measuring out. So I'm on the 2-day chart here on Coinbase, and just counting the Elliott waves and the way they're interacting with one another. I was looking at this as wave 1, 2. This is an extended wave 3, which you have a fifth wave extension inside of wave 3. This had a nice expanded flat wave 4, and it pushed up to a nice wave 5 for a sideways consolidation. What had me kind of confirm that count is the retrace that happened thereafter, and I'll get to to where I'm getting as soon as I give you some backstory here. But the retrace came back to the 50%. This is common with wave 4, how price will come down to the 382, bounce up, and eventually hit the 0.5. Once the 382 gets hit, I do expect the 0.5 eventually to get tagged, and in this case it did, giving you a very nice wave 4 for then a wave 5 up. So this is in linear scale. So the way I was counting this currently is a wave 1, 2, 3, 4, and 5. That's wave 5 complete. And then you came back and back tested the top of wave 4, which could be a wave 2. And now you've got a wave 1 and another 2. So this can be 1, 2, 1, 2. And this is going higher than most expect. Now that's just Elliott wave theory. Doesn't mean it has to happen for sure. But let's turn this on to the log scale. And I usually don't do Elliott wave in log scale, but I'm always also trying to prove my idea incorrect. So let's take some measurements with regards to Elliott wave, the way that I look at it for measurements. And in log scale, you can see wave 1, 2, wave 3 making it up to the 1.618. And usually I would target the 2.618 for a wave 5. So maybe this does pop up here and gives you a wave 5 up to 160. That's good, but I think you have a lot of divergences going on with regards to the RSI. Pulling up the RSI here, the RSI is making lower lows, meaning your trend is weakening as you're making higher highs and higher lows. This 109,000 high, you can see where the RSI was. It was basically pushing the highs. Your highest point currently is kind of what we would expect for a wave 3 peak. That was at 74,073 and some change. And then price came up for a slightly lower high on the RSI with a higher high on price, giving you a potential for a fifth wave. And now it's made a higher price with lower relative strength. So the trend is weakening from an RSI standpoint, and you are coming close to a 2.618. But if we were to take the measurement of wave 1 plus 3 projected from wave 4, your target would be the 618. And we're right at it. If I get my measurements a little tighter, it probably hits right on. Maybe it's got one more pop up to 128, and you can count that as 5 waves up complete. So 1, 2, 3, 4, and then some kind of 1, 2, 3, 4, 5 completed 5 waves. And now you're looking for potential ABC correction. That would mean price starts making a downtrend here, would likely come and revisit the 74,000 lows bounce back up to previous resistance, treat it as resistance again before flushing down. I would anticipate somewhere around 30K, and that would just be measuring this. If the market has topped, essentially you're looking at the same thing. 1 year of down, coming down a similar amount as previously would get you back down to, it'll fill this fair value gap down here, grab all the liquidity, and backtest that 30,000, which I remember 2 years ago, that is where I wanted to buy. Well, I wanted to add. I had already bought down here, but I thought that would be a nice backtest after a reaccumulation, pop up and backtest the previous high. Never got that, so maybe price comes all the way back down there, fills this little inefficiency there, and that'll be the 4-year cycle low. Again, this is in log scale, but I found it interesting that the measurements were correct and the divergences are there. You are having multiple divergences. I think a lot of indicators are indicating a potential top or more chopping sideways and potentially down. So maybe the cycle is over and it's ready to go down. What do you need that to start that? You need a weekly candle lower low, and then a lower high, lower low, and then start yourself a downtrend, or just flush down all the way to 74 fairly quickly, and then bounce back up for a sell setup, and then grind out. What would make that happen? I don't know, some kind of recession or deflationary event. And then it's just Bitcoin doing Bitcoin things, making its standard corrections that it has. This trend line does appear to be breaking right there. So we will see if it's a fake break or if it's a real break. So there's an argument to say, hey, the top is in. You have multiple touch points on that trend line, and now you're breaking. Don't have a closure below there. Maybe I can tighten up this trend line a little more. That makes it even higher. So yeah, just this past week breaking down. So there's certainly an argument to say the top is in and it's bear time. We could also look at how long between the peaks were. Let's check the weekly chart. So if I take the weekly chart and I mark off the top of the 2017 bull market, line it up with the top of the 2021 market, the current top technically should have been right at the beginning of October. And that would be the standard 4-year cycle playing out in time exactly the way it did before, measuring cycles high to high to high, which is the proper way to do it. But it is interesting how some sort of top was made at a similar time frame when the expectation would be there. Does it play out again? Maybe. Then we're looking for the 4-year cycle low. Just move this down over here and find the November time frame for a cycle low in 2026, and then pattern would be exactly the way it was before. Every time just plays out exactly the way it did previously. It kind of sounds too easy, too simple, but the best things in life are pretty simple. So definitely something to watch out for is to say, hey, maybe the top is in, and then look for this correction to repeat from there right into your cycle low. And you'd look for an ABC down to roughly 38K. I think I had it measured to 28 actually. 28,000. Is that too deep? Yeah, maybe. You would certainly be breaking another trend line here. So that's interesting. Let's make this a little thinner. Kind of doing this in real time here. Say that's going to go down like that. We'll make that smaller. That would be interesting. If price does come down to 75K sometime in February, that might be a bounce. And that'll be touching that previous trend line. That's an interesting thought. I hadn't looked at that until just now. So what if that ends up being your A wave, and your B wave comes up for a nice bounce and then flushes out because MicroStrategy has to sell all their Bitcoin for some reason. You never know. So then how do you trade it? How do you play it? Well, you wait for a weekly candle, lower low, and say, hey, I'm going to sell the lower high. And that is valid until the weekly candles start closing higher highs. You can see right now, we're currently working on a candle that has not closed yet. You have a higher low here, kind of a similar low, and now price is flushed down, but we don't have a closure yet. So in another 5 days, if this does close down here, then you do have an argument to say top is in, you have the start of a weekly downtrend, a lower low than previous low, then you would look for the lower high. Where do we look for the lower high? See if I can get my measurement tool on. So you went that much lower. Say price closed right where it's at now. And then you take that up there. Your lower high comes in right at like 116, 117. So then this whole range ends up being resistance. And then you start pushing down. I think regardless, even if price does close back inside the range, I think you're going to get some supply come in up there regardless, just because of liquidity. You'll probably come back down, and then you'll see if it ends up being a lower high or keeps pushing down for a lower low. I think I would definitely be more keen to this bearish idea if price was to have closed here. If it goes and grabs liquidity down like 93, takes these wicks, takes those out, and then closes a lower low, then comes up here, grabs liquidity, and fails to make a higher low, and then breaks below that liquidity grab, then you should be pushing down into some kind of sell uh, into the previous support, which would be 74. You'd likely take out that liquidity or get somewhere around this demand zone before bouncing back up. And if that does happen, then you know you have a lower low, look for the lower high, another lower low, and you've got yourself a more macro downtrend into the 4-year cycle low. So it's all about keeping your head on a swivel and looking in both directions. The markets do go up, they do go down. Don't stay fixated on an idea just because everybody is talking about it. Kind of need to cut the noise out. Camel Finance definitely had a great video about cutting out the noise. Go touch grass. There's nothing to do. If you want to try buying this market, if you're shorting this market, then yeah, there's work to do here. You'd be working this down. But if you're trying to buy this market, it's in a daily downtrend. You're trying to work on potentially a higher low on larger time frames here from this being a high. There's your higher high. Your higher low comes in right around here. But if the daily or if the weekly does close candles down there, you technically locally have a lower low. And then you would look for a lower high and then a push down. So we will see the way this shakes out. But definitely don't want to be too one-sided on things. It is a market. The market could have topped already, and it is time to go down, and we're about to have some big surprises coming in 2026 that are unexpected, sort of unexpected. They're expected, but they'll, they'll come at you by surprise anyway. But yeah, we are expecting not good things coming in the future. But we'll see. We'll see the way this closes in the next 5 days. All right. So I hope that helps. Yeah, look both ways before crossing the road. Know your buy setups, know your sell setups, and keep your invalidations where they're supposed to be. Have a good night. Keep them stops tight.